Well, folks, I hate to have to make this video, but today we're going to be talking about an absolutely gigantic mistake. And hopefully, you guys listen and we can all learn a little something. So, without any further ado, let's get into it. Give me one sec here. My name's Pat Mitchell. I have been a professional day trader for the past 11 years, and I am here to bring you professional day trading education, all here for free on YouTube and X. Give me one quick sec now that we've fired up these charts, and let's do this. Okay, folks, so we're going to go over the trades here. So this morning, actually set up not necessarily the way that I wanted. So if you turn your attention to the left-hand side of these charts, these blue charts, these are daily charts. And generally when we are looking to gap up over the previous close or moving averages, I'm looking for a gap up that gets us nice and close. I want it to gap up and over, but I don't necessarily want it to gap all the way up here. I want it to gap. I got to turn this magnet off. I want it to gap somewhere in this area because it puts us in range. It's almost halfway in between the first moving average and yesterday's highs, and then the previous close, the gap fill, right? So it gives us a really nice range. And if you take a look, it's really not that different. It actually just put us up into that upper range kind of category. But it makes it a lot cleaner. So what you have to do instead is now, because this upper level, we gapped over our initial short target, because that would be our initial short target, right? We want a gap up, and if it pops, comes into this level, then we would execute these short. Well, we didn't do that. We ended up opening above that. So what we now need to do, for the most part, is let it open up, sell off, and it needs to slice through this support level. So you might be asking, well, why don't you just go long? Well, you can, but the odds of it failing are very high. What you would want in this situation, instead of a dip, you would want a pop coming up into the next level of resistance. And the reason why for that is, even though we're kind of on a little pullback, it's not really a sufficient pullback. Now it was, and it did it all in one day, and then it got sucked up. It's too much movement for one day's range. It's too much range. So what you want to do is take it. You want your daily charts to be very step by step. Those candles need to be step by step. Comes into a support level, comes up to the next resistance level, right? Closes at that resistance level. Next day, gaps up over that resistance. That turns into support, and so on. It kind of stair steps up. That's as clean as you can get when it comes to daily charts. But it didn't do that. So instead of going long, and like I said, you can go long, and I did go long, and you'll see here in a minute, but you want to be very cautious with that. Okay. So what I wanted was on Qs here. So on Qs, this is the first trade. It opens up, it washes, it just barely gets below. But what you might not realize without looking, because generally I would have a level struck there, but I put all of these levels up at 9 a.m. and right towards the market open, it came up and it tested the next resistance level up, which is the opening price from this day. Okay. So it's right into that resistance level. So it's kind of perfect. It opens up, it pops, and then washes down, barely breaks this level. Generally, I like more of a proper slice through, and then I will execute that short. But because we have risk, defined risk right here, I'm okay with when it comes back up here, I will execute the short and then work that trade up. And the reason for that is it's tested it pre-market coming into the market open. The market opens, it tests that resistance level. If there were any kind of shorts or any kind of buyers, either way, creating that buy pressure, making it come up, if it was truly strong, it would have come up right then and there. It would have blasted through that to pull back and test support. So what I've been talking about in this entire trade recap is essentially technical analysis 101. If support breaks, that support then becomes resistance and vice versa. And that's all this is. There's nothing fancy about it. It is simply that. Now, it is how you manage it. It is all of your other strategies that are surrounding it, like management strategy, risk strategy, sizing strategy, all of that. It's not necessarily how you enter into trades. And I've proved this a million times. Well, maybe not a million times, but I've proved it a lot with live trading with my momentum members. I'll get them to say execute. I'll get them to tell me to execute wherever they want in the worst spot imaginable to go long or the worst spot imaginable to go short. And I will day trade live and I will show them how to manage that position. It's not necessarily about the entries. It is about your management tactics. That's all this comes down to. So we're gonna cover that big mistake here in a minute. So hang tight. Just keep in mind this conversation that we're having right now. So execute the short on the way up, and then as it comes down, I'm simply paying myself absolutely fantastic trade on this. So locked in a substantial amount of $10,236. So really, really nice, solid trade. And on that trade, you know, that 10 grand may sound like a lot, but this here is basically a 100% trade, over a 100% trade from entry to sell, best entry to best sell. So on that very nice day, let's keep going. Now, the rest of the work was done on SPY. And on SPY, let me see, that might have been, yeah, let's go to the long first. So like I said, you can go long, right? But you need to be prepared that this will most likely fail. So it's very quick in and out. And this entry is not the greatest entry. Generally, you'll see my entry right at lows of those candles because I'm entering into those levels. I had the wrong ticker in one of my order managers. Up here, I always have SPY, but I changed it to work two Qs positions, or potentially work two Qs positions, one long, one short. So puts and calls. So I wanted both of those lined up at the same time. And when I went to execute that trade as it's coming down and confirming here, so right in here is what I'm looking for. And I'm going to point out something very specific that is really important. And that's why it's a little bit late, because I had to re-put in Qs and so on. So I'm going to zoom in a little bit just so then you guys can see exactly why I entered. So I'm not entering necessarily into confirmation right here. Okay. So normally what people will do is they will enter into the long on confirmation. And then as it comes down, it confirms right there, they will enter. Okay. That's not what I'm doing. I'm looking for true confirmation. So you'll see this candle wash to here. Okay. Next candle opens, comes down, cannot break those lows. It's telling you a subtle sign that it is going to want to come up, at least for the short term, because it could not have continued sell-off. Instead, it is rounding. It is starting to round. It is creating a very subtle and slight higher low. That was my sign. That's my cue. So, like I said, entered into that position, paid myself, and then basically just as it's coming up, pay myself. And once it comes down and breaks that, I get out the rest. Very quick, small little trade. So locked in an additional $192. I was up a fair bit more, but you can obviously tell from the volatility of that candle, it's going to draw that position down. So that's fine. Managed it correctly and well, and I'm happy with that. And then, one sec, let me get to my last trade here. So on SPY, it gave what I was looking for. Now, I wanted this setup where it slices through this support, it pops back up. I'm looking for it to come into that resistance to execute the chart and risk off those highs. Very simple, straightforward trade. Average into the position on the way up, pay myself on the way down, wait for the follow through. It gives me a little bit of follow through, take off the majority. And then once it comes back up, simply stop out. None of these are well, I shouldn't say that because Qs was a pretty big trade. But a lot of these don't have a lot of range because there wasn't a lot of range today. It's a very tight range day. So now I want to talk about a really big mistake. You know, there's a lot of traders at the beginning of their careers that don't give this enough time. They don't give it enough time, but it's not just that. There's a lot of things that get in the way of them giving it the proper amount of time. Ego gets in the way. You know, you can scroll through a lot of the comments on basically any channel. You can go onto mine. There's always retarded comments from people that clearly have no idea what the fuck they're doing. You can tell by their comment, they're very new. And instead of asking just a legitimate question and being curious about what they're seeing, it's because they lack the intelligence to understand experience. And there's things, these are just free YouTube videos. And I think people think that this is everything I know that I'm going to give away on YouTube. I would never do that. I'm giving you guys a lot, but I'm never going to give every little thing that I've learned. Why? Because I've had to sacrifice and bleed for this to get to the position that I am. Now, very few people can make it long-term, 10 years plus. I've been doing this over a decade with wild success. It is a difficult task to do. And it's not difficult because none of these trades are difficult. It is about doing the right thing every single fucking day. And the mistake that's made that I see all the time is people don't understand. They cannot be consistent to an infinite level of consistency, because that's what this takes. Every day, doing the right thing. It's not just trading. You know, I saw someone that I know down here that works for us. And this person has always been on time. He's never asked for anything. An absolute, just stellar person, stellar employee, the whole nine. We have a lot of people that work for us on our property here. And it's not about doing it short term. So this person did everything right for 4 years. And then in one moment, a bad judgment, a bad error in judgment, completely destroyed all trust, all everything with one moment, one singular moment. And that's what I was dealing with on Monday. So when you're asking questions, I think the guy's name was Steven, I could be wrong, but you're asking, where's Monday's recap? I got a fucking life outside this, man. And sometimes I got to handle shit. So if you don't see a recap, there is an absolute very good reason why you're not seeing a recap or anything else. But to get back to what I was saying, now we've obviously forgiven this person because it's one mistake. I get that. But it's not just us that she affected. She affected a lot of people in this one moment. And that's what this does. Every day when you're behind the desk, you're going to start taking it for granted. You're going to start getting comfortable. You're going to start feeling very comfortable in your surroundings, which is a good thing. It's not a bad thing, but it's that complacency that's going to get you, because all it takes is one mistake that'll wipe you out. Now, one of the reasons why you'll never see any massive losses on this channel, you won't see it. Now, if you think that the other day, maybe a week ago, whenever that was, a $25,000 loss is a massive loss, you got no idea the size of account I'm running. Don't worry about a $25,000 loss. Like I tried telling people, if you understand, if you don't understand and you think that that's a lot of money, take a zero off, because it would be the equivalent of like a $2,500 loss for you guys. It's not a big deal. But you'll never see those hundreds of thousands, $1 million losses out of me. Never. Why? Because I've learned my lesson years ago about big losses, uncontrolled losses, not thinking about risk. I am always mindful of risk. In every position I take, I already know my max loss potential. That's how I size my trades. It's a part of how I size my trades. So I'm well aware if this goes horribly wrong, not just booked at a 10% loss or a 20% loss, I mean horribly wrong, I understand my risk. Just any good businessman or woman will know. They will always know their risk, always. And that's one thing a lot of people don't take into consideration. But let's get back and then we'll wrap this up. I'll make this quick. But I plead with people constantly on this channel to do the right thing and to give this the amount of time that you need to give it. Now, I'm not going to go into details as to why I'm talking about this right now, but it is the saddest thing in the world when I see people with potential absolutely blow their shit up because they lost control once. Because that's all it fucking takes. And it's very easy to think that this is a game. This is very video game-like. It doesn't feel real. And that's the connection that you need to break. If you do play video games, this is not a fucking video game, right? Like, to be honest, this is big boy shit. There's a lot of money. You're trading in the stock market where there is trillions and trillions of dollars, right? This is serious. So treat it that way and do the right thing day in and day out, even when you don't want to, when you have that itch inside you to just one time, or you're going to blow your shit up. And I don't want that for fucking anyone. Okay, guys, I hope you all have a good evening, and hopefully you actually think about what I'm talking about here, because I've been doing this a long time and I've dealt with tens of thousands of traders, and I've seen a lot of people come and go, more go than come. And that sucks. And it doesn't have to be that way. Adios, folks.